Hello, viewers. I'm Ava. Welcome to another edition of my class.
Your stock just dropped 15%. Everyone is telling you to sell. Here is why that might be the worst move you can make. You check your phone. Red everywhere. That stock you bought 2 weeks ago is down 15%. Your stomach drops. You open Reddit. One person says sell everything. Another says hold. Someone else says buy more. A news headline says the market is crashing.
Another one says it is a normal correction. And you are sitting there staring at your screen, not knowing which voice to listen to. This is the moment that separates people who learn to invest from people who quit. Price drop and a business problem are two completely different things. Prices move every single day for reasons that have nothing to do with the company itself. Interest rate rumors, election uncertainty, one large investor rebalancing their portfolio, or just general market fear. In March 2020, Apple's stock dropped over 30% in a matter of weeks. People panicked. Headlines said the market was collapsing. But Apple was still selling millions of iPhones, still had over $200 billion in cash reserves, and the business itself had not changed at all. Within 5 months, the stock hit all-time highs. The people who panic sold locked in a 30% loss. The people who did nothing or bought more came out significantly ahead. And Apple is not the only example. Amazon dropped over 90% after the dot-com crash in 2000. 90%. If you had invested $10,000, it would have been worth less than $1,000. Most people sold. But the business was still growing. Revenue was still climbing. Customers were still buying. The people who held through that drop and stayed invested are sitting on one of the greatest returns in stock market history. The lesson is not that every stock recovers. Some do not. The lesson is that price alone does not tell you whether to sell. The business does. 3 questions to ask before you panic sell. 1 point, did the business change or just the price? This is the most important question. Check the fundamentals. Is revenue still growing? Is the company still profitable? Are customers still using the product? If nothing changed in the actual business, the drop is almost certainly noise. 2 pay, is this a market-wide drop or company-specific? Look around. If every stock in your portfolio is down and every major index is red, the problem is not your stock. It is the entire market. This is the Warren Buffett test. If you like the business at a higher price, a lower price should be even more attractive coin, as long as the business has not changed. If the answer is yes, selling makes no sense. If the answer is no, ask yourself why. And ask whether that reason existed before the drop, or whether you are just reacting to fear. Follow for more lessons on making calmer decisions when markets get noisy.